It's Monday, the 22nd of March 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. In today's headlines, 12 months after the bottom of the share market, the best performing stocks, surprisingly, have little to do with the pandemic, but the worst performing stocks do. Plus, Crown Resorts receives a takeover bid from private equity group Blackstone. Supermarket giant Coles commits to a much greener future along with its competitors, and the Bank of Mum and Dad is now the 9th largest lender in the country. Our lead story today, 12 months ago tomorrow, the S&P/ASX 200 hit its lowest close, 4,546 points in 4 years, as fear about the spread of the COVID-19 pandemic sent share markets around the world tumbling. Since that low point, the local market is up 48%, though that number masks some extreme volatility among stocks. The tech stocks have done best over the past 12 months because they've offered products people wanted. Gaming group PointsBet Holdings is up 1,100% over the past year, Afterpay is up almost 1,000%, and Zipco is 600% higher because both offered a new way of paying for goods. Overall, tech stocks in the Consumer Discretionary Index, which includes everything from Wesfarmers, Aristocrat Leisure, Tabcorp and Domino's, to Harvey Norman Flight Centre and IDP Education, have done best. The worst performing sectors have been the utility stocks, including APA Group and AGL Energy, and the consumer staples, which includes giants like Woolworths, Coles and Treasury Wines. Among the big companies, pharmaceutical group CSL, retailers Coles and Woolworths and Telstra are all trading at levels below 12 months ago. The big banks plus Macquarie Group have all outperformed the market, so too BHP and Fortescue Metals, even after the recent falls in their share prices. The moral of the story? Broadly speaking, the companies that have done best are the ones that provide services in demand, irrespective of the pandemic. In overseas news, officials from the US and China met in Alaska over the weekend. It didn't go particularly well. America said China's approach could lead to a far more violent world, while China's envoys attacked America over its human rights issues. The Tokyo Olympics will take place later in the year without overseas spectators in a bid to keep a lid on the spread of COVID-19. And spare a thought for the governor of the Turkish Central Bank. 3 months into the job, he lifted interest rates to tame inflation, winning plaudits around the world. The country's president promptly fired him and put in his place an academic who has lobbied for lower interest rates. An independent central bank is an important part of a functioning economy. Locally, Crown Resorts has received a takeover bid from private equity group Blackstone, according to a report in the Australian Financial Review. The PE company already has a 10% stake in the $7 billion gaming group. The paper is reporting that the bid is worth more than $11 a share. Crown's shares closed at $9.86 on Friday. The Victorian Royal Commission into whether Crown is fit to hold a gaming licence starts this week. A New South Wales inquiry found last month that it wasn't fit to hold a licence in that state. Supermarket giant Coles, the nation's 12th largest user of electricity, said it will deliver net zero greenhouse gas emissions by 2050, and within 5 years, it will power its entire company with 100% renewable electricity. Chief Executive Stephen Kane said that while it's a right thing to do, it's also a financial necessity, and customers would vote with their feet if Coles didn't become carbon neutral. Woolworths has already made similar commitments, as have Bunnings, Officeworks and Aldi. Retail sales fell by 1.1% last month, disappointing economists who expected a rise in turnover. The Bureau of Statistics said the result reflected 5-day lockdowns in both Victoria and Western Australia during the month as a result of COVID-19 outbreaks. Parts of New South Wales have been declared a natural disaster amid widespread flooding on the central, mid and north coasts of the state. Thousands of Sydney's residents face evacuation. According to the Bureau of Meteorology, there was a 1-in-100-year event over the weekend, and more rain is expected this week. Farmers have warned that food prices could rise as a result of the downpour, while estimates put damage at more than $1 billion. The rain didn't prevent another strong weekend for auctions in that city, though. Sydney had a preliminary clearance rate of 87%, about the same as last weekend. Melbourne's clearance rate was 79%, according to CoreLogic. Job services platform Airtasker is one of the bigger initial public offerings this year, worth $255 million, and it was due to list today. But an internal glitch on the ASX has delayed it by 24 hours. It adds to the complaints about the ASX, which experienced an outage last November and is being investigated by regulators about what went wrong. And here's a cracking little story from the Financial Review. The Bank of Mum and Dad, and that's exactly what you think it is now the 9th biggest mortgage lender in the country. According to an analysis by researcher Digital Finance Analytics, the amount parents give, lend or underwrite for mortgage deposits has hit a new record. The Bank of Mum and Dad has about $34 billion in loans, making it a bigger mortgage lender than HSBC, AMP or Bank of Queensland. That's the Fear and Greed business headlines for today. Make sure you subscribe or follow so you get it every morning. If you'd like more detail and more stories, search for our full Fear and Greed podcast. Today it includes an interview with Austrade Chief Economist Sherelle Murphy. I'm Sean Aylmer. Have a great day.